Taking a look at Uber ahead of tomorrow's earnings report, you're looking at shares up nearly 6% here with three things to watch from this ride-sharing company. We want to bring Yahoo Finance's Dan Howley. And Dan certainly has been off to a strong start this year. What do investors need to keep in mind tomorrow?
That's right, Shauna. Those three things basically can be broken down into delivery, mobility, and, I know this might sound weird, a potential increased threat from Lyft. Now let's go over the continued growth in mobility. Let's look at the big numbers first. Revenue, we're expecting $8.7 billion versus last year revenue of $6.9 billion. Adjusted loss per share is expected to be 8 cents. That's compared to $3.04 last year. As far as mobility goes, we're looking at $14.8 billion gross bookings expected. That's compared to the $10.7 billion last year. And you can see that this kind of continued growth in the mobility section, which was really hammered during COVID, is expected to continue moving forward. So that could be a really good boon for Uber. The other piece of the puzzle is difficulties in deliveries. And deliveries really acted as the kind of godsend for Uber during COVID. It was the way that the company really continued to make money. People were ordering, sure, nobody was going out on the road. So it was up to the Eats, previously called Eats, now delivery business. That's expected to bring in $14.9 billion compared to $13.9 billion in 2022. And the idea here is that if we see waning consumer confidence, if we see people starting to pull back on spending, well, getting food delivered is pretty expensive. I think one of the analysts that I was looking at pointed out that it's as much as a 35% increase to the food price just because of tips and delivery fees. So, if people are pulling back, we could see issues there. And then, the Lyft idea, the thesis here, just bear with me, is that new CEO, obviously speaking to our own Brian Sozzi, saying that they want to be more competitive. That could mean that pricing could become more competitive between Lyft and Uber. And so if people start to see that Lyft offers a better opportunity for pricing, you're not going to have to pay as much when you're traveling, especially when people are being more cost conscious. It could prove to be a bigger threat to Uber than it has been. But again, Uber has its ads business, its mobility business, its transport business, and obviously the regular ride. So I don't necessarily think it's going to be a huge problem for them moving forward. But, it's something to watch for.
Certainly something to watch. Again, shares up 33% since the start of the year. Dan Howley, great stuff. Thank you.